Hafaday. My name is Ryan. I'm the president of Pinpoint Guam, and I'm here today to talk to you about real estate. And today we're going to talk to Sang Sook with Milo Appraisals. And Sang brings a wealth of information and experience about the local real estate industry. And one of the most important things is he's been around a long time, and he's seen a lot of things, and he's seen a lot of the larger transactions. And those are the things that move the market: hotel sales, warehouse sales, large retail buildings, shopping centers. Sang's seen and valued those things. He's seen the infrastructure that goes into making those transactions work, and he's going to talk to you about them today. He's going to talk to us. He's going to educate us about the state of the market, the state of the data that supports the market, and where we are going as a real estate industry. If you enjoyed this content, please give us a like, subscribe, or a share. Check out any of our channels: Spotify, Apple Podcasts, and then also we have an Instagram, Facebook, and LinkedIn. So we're everywhere. If you want to be in real estate, you should be where we are because we have some great information. Enjoy this episode. All right, Sang. Before we start, we were talking about how you've been in this industry a really long time, but you're not as front-facing. The people who need to know about you. But can you tell us a little bit more about who you are and how you got to where you are today?
I guess summary, right? So I pretty much grew up in Guam, and my family's been here since the mid-'70s. My dad was part of the big Korean construction boom through the 80s and early 90s, and rode the Japan bubble until it popped. And during that time, I was in Southern California getting my college degree after I graduated from FD in 91, and then entered the real estate appraisal world out in California. So I was out there for roughly 23 years before moving back in 2015. So lion's share of my experience, roughly around 16 years, dealing with commercial property out in California, Arizona, and Nevada. And when I moved back, I partnered up with Nick Captain just to get my feet settled. And after getting enough geographic competency and getting refamiliar with the Guam market and the lay of the land, started my own firm back in roughly 2017, I believe it was. So I've been back for about 10 years doing commercial real estate appraisal for a bunch of clients, mainly banks. But
All right. So you said so much in that statement that I'm going to unpack over the course of this thing, right? Number one, Korean construction boom. Mm-hmm. Okay, let's talk about that at some point. But also, you mentioned Nick Captain, right? You came up with him, and he's one of the. Talk to me about who Nick Captain was in terms of the commercial appraisal industry.
So Nick established himself, I believe, in the 90s as pretty much the premier commercial real estate appraiser on island. And he did very well. He's probably one of the smartest real estate appraisers that I've worked with. And I've worked with a lot of brilliant appraisers in my time. And he's up there. He's really good. And he eventually trained Siska, who's also, I guess we're the only two designated MAIs on the island. So Siska worked with Nick as well. And then she's, after her success, she started her own practice. And, I just kind of filled in those shoes for a couple of years. And Nick helped get me settled and into the industry. And then, he wanted to retire, and I just started my own business at that point. So
I see. Well, I know Nick and Siska very well, and if Nick's part of your coaching tree, yes. I can see. Yeah, as far as like in terms of the connection to local real estate, and it's important to know historically where we've been, how we got to where we are, and where we are now. So, can you talk to me about where we are now?
In terms of personally, or?
Well, no, in terms of the real estate industry on Guam. Give me industry. What's the pulse? What's the snapshot right now?
Right now, the snapshot, I would say, is uncertainty and certainty at the same time. So it's kind of two things are happening at the same time. There's segments of the market that are very strong, that are specifically tied to the military buildup. But then the other segments are still soft because they're tied to the tourism industry, which hasn't recovered yet since COVID. So we're in this like mixed situation where there's high demand for certain asset classes and speculative demand on the rest. People are just still trying to figure out what's going to happen in the next 5 to 10 years. The strongest market currently would be industrial and residential, single family and multifamily. Mainly being there's no supply. The demand is high, but there's just no product out there. We're running out of warehouse spaces. We're running out of housing on all levels. We're running out of affordable housing for low income. We're running out of middle class housing, and there's not enough military housing. So all across the board, there's just a housing shortage that is probably not going to get addressed in an adequate manner, or in a timely manner. And no matter how much they build at this point, if you start seeing the numbers that GURA has put out, and also the request for information that the military has put out, and you start piecing the puzzle together, the amount of housing that's needed within the next 5 years, 5 to 10 years, if we just went crazy and started building without even thinking about it, we probably still wouldn't meet the demand.
Which is nuts if you think about it.
Yeah.
Just a problem so significant that we have a pretty significant construction apparatus here. As I understand it, we have another $4 billion in capacity. Do you find that to be accurate?
I think it depends, right? Mm-hmm. I think the capacity right now is geared towards the buildup, and it's not geared towards the private sector.
Right.
And there is a separate market demand when it's coming to that dynamic as well, because all the capacity is focused on infrastructure and needs that the military has for the Marine buildup, for the Army buildup. And on the private sector, even though there's demand there, there's no resources being allocated out to those places. So
that denotes the question, okay, there is demand on both sides, but one demand is funded with an unlimited budget,
right?
And one demand is funded by market dynamics.
Right.
So tell me about those market dynamics. What are the market dynamics that we can rely on to make decisions now?
It's hard because on the private sector, the clearest indicator that demand is being met is when you start seeing new construction. And on the private sector, we're not seeing enough new construction to meet that demand. And inherently, there is a principle within the appraisal field. It's called economic obsolescence. And what economic obsolescence is, the cost to build something needs to be justified by the revenue that you can generate from it. So the income has to justify the cost. And every time I run those numbers since 2015, and this probably goes even well before 2015, rental rates are way too low and construction costs are way too high. That's why you never find a situation where people are building for cash flow purposes.
Right. And so that's something that I see we all see when we're traveling. Like you say, you started commercial appraisal in California. I've spent a lot of time in West Coast California, specifically Arizona, where they're building millions of commercial warehousing for semiconductors and chips manufacturing. And that's what commercial landlords do, but that doesn't happen here.
Yeah, and the cost is just too high, right? And it's a lot cheaper to put up a tilt-up building in California that they can build in like 6 months than trying to build something here that costs 3 times as much, and then it's going to take 2 to 3 years to build. So there's a lot of lost opportunities because of cost and timing, and it prohibits people from building.
But they still do.
The people that are building, though, are owner users, because they either can't find space or they want the benefit of ownership and depreciation of their asset. So then they'll build, get a loan on it, depreciate it, and in a way they're going to end up pretty much where they're at, paying rent. So it's a benefit for them to be owner users in those situations, or partial owner users. They'll build, occupy a portion, and then rent out the rest of the space to offset any kind of carrying costs, or management costs, loan amounts, things like that.
So what I've just heard you say is development on Guam is predominantly driven by the end user.
Mm-hmm.
And so any ancillary benefit is a bonus or unintended, or we're doing this anyway, so why not build this extra square footage?
Right.
Or partnering with somebody who has a similar need or a similar use and finding the synergy there.
Right.
So can you tell me about any opportunities that you see right now, or any sectors? Well, you've already said we're overexposed.
Right.
So tell me where you think maybe people are missing things.
It's the market is so small that I cannot confidently say that we're missing anything in this market, because the issue with this market in Guam is we're just small and we're isolated. So if we just take a simple example like Honolulu, during COVID, when we lost all our tourism arrivals, Honolulu maintained all their tourism arrivals because the domestic travel offset the international travel, and which is still the case now. So their domestic travel is up in Honolulu, so that's why their tourism numbers are still strong. Mm-hmm. But here, we don't have a secondary market like that. It's either Japan or Korea, or it's bust, right? And the reality of that, I think everybody saw when COVID hit. And we're continuing to see it because the tourists aren't coming back because the dollar's too strong. The yen and the won are weak against it. So it's just cost prohibitive for these people to come back and travel here. So it's hard to say, is there any missed opportunities at this point, because it's so speculative, right? If tourism recovers in the next 3 years, and in hindsight, there was so much missed opportunity, right? But what if tourism doesn't recover? What about all those speculative investors that invested, and then 3-5 years from now, nothing's really changed, right? Is that really a missed opportunity, or it's just they just didn't time the market right?
Sure.
Right. So I don't know if it's necessarily a missed opportunity, because there's no clear economic indicators that's going to say, oh, yeah, we're trending this way. This is almost guaranteed. So get in now before it's too late. Right. We don't see that in the other sectors.
And that's one of the things I've been struggling with a little bit is the cycle. Mm-hmm. Just when I first came into real estate and started practicing here, I was under this. I forget who told me, but Guam's on a 12-year development cycle, effectively. So that's historically just kind of been the arc. But I don't know if that's true or not. I can't brand that to somebody.
Right.
Tell me what you know to be the cycle. And now we've gone through all these crazy black swan events. What do you think it is now?
Well, let's take the 12-year example. We're in 2025.
Sure.
So 12 years ago is 2013. What was happening in 2013? Really nothing. Everybody was still speculating about the military buildup.
Fair.
Right? And that was kind of the point where it was taking so long. People were, should I stay? Should I exit the market? Because they bought all their stuff in 2010, 2011, 2012, right? And then all of a sudden, this buildup's not happening. What do? Do we hold, or do we unload? Because, it's just taking too long.
Right.
Subtract another 12 years from the 2013 number, and now we're at 2001. Mm-hmm. How much development has actually happened since 2001 to now?
Fair, yeah.
Probably not that much. Mm-hmm. Outside of single-family houses, look at major commercial assets. The only one probably is Cortex Summer Towers. Mm-hmm. And that was a failed development opportunity by a Korean investor. They ran out of money. Cortex bought it pennies on the dollar, and they have the scale to buy it cheap and build it cheap. right? They have that economies of scale working for them.
Yes.
So they made it work, right? They took a failed project and made it work. It's not, they didn't build it from the start, right? They pounced on an opportunity like that. So those might be opportunities, but very few people can play in that world. It's not for everybody, right?
Yeah, no, and I agree, but sometimes it just takes someone to kind of put all the pieces together, right?
Right.
Because so, as an example, there are primes, right, who have the equipment and the capacity. They have many employees who probably make 25, 30 bucks an hour, but probably don't own a house, right? And so how do I fix that? How do I solve a market problem that helps me and helps the market? And so, well, there's affordable housing problems or affordable housing programs that I'm in there. So what if we got together with other businesses and internalized that need and created, inventory for that need?
Right.
And so that's the thing. I think you're right. The community has all these endemic issues that create that limit the creation of inventory, but we as a community have needs. But we have, as a community, have capacity. It's just being directed elsewhere.
Right.
So we have to find a way to redirect that capacity back to the places where it's needed the most, and how to make it economically viable for everybody.
And that's probably the single most challenging thing to do here on Guam, because a lot of what you're talking about isn't relegated, okay, private sector, figure it out, right? There's a government component to it that sets the policies, the laws. There are certain federal laws that prohibit the type of coordination that you're talking about, where it trickles back down to everyday people.
Sure.
Right? And one main thing for Guam is we're kind of stuck under the Jones Act. And that locks in our pricing because the shipping cost to send things here on U.S. flight ships is a huge burden, right? That cost is never going to change as long as the Jones Act is in place, right? So how do you reduce cost when there's already a high fixed cost to ship things here? You really can't, right? And then if government policies are the way that they are, where it's too much regulation, where it makes development prohibitive, then those are things that are out of the control of the people that we're talking about, right? Because we have no control over those aspects, and it's challenging. That's the biggest challenge, right? Because it's like you have to figure out how to make it cheaper, but there's already these huge obstacles for that to happen. And interest rates are high on top of that right now.
Understood.
So there's so many market dynamics that are influencing pricing and how do you even make it more efficient, right? Your question is hard to answer.
Well,
because if it was solvable, I think somebody would have figured it out 20 years ago.
I might crawl under the table right now into the fetal position and start rocking.
So I think if somebody could figure it out, it would have been done like 20 years ago.
Yeah, fair.
Right.
Yeah.
But we're so used to the status quo, and it's kind of, it is what it is mentality almost.
Well, so with that, I will say people have figured it out, right? And it's been lucrative for them. Paradise Estates has figured it out, right? Sienna Gardens has figured it out.
Yeah.
Cortec figured it out with the Summer Towers. The Litex have figured it out, right? That's the thing. Carlos Camacho has figured it out.
Yeah.
Kudos to Carlos, right?
Yeah.
So where there is a will, there is a way, and it's just finding those the nuance that works with the market and just fills the gaps, right? And I just think that's why we're here. We're talking about the problem, right?
Yeah.
Just to figure out those solutions, because hopefully one of you catches a thread and brings a solution to the market that really solves some of these issues that were hit us in the face every day.
Yeah, even for the Litex stuff, it's basically like 3 or 4 people that are trying to be involved in that game. And generally, Litex aren't profitable. And a lot of Litex don't pencil out in the States. The only reason why it works here in Guam is they get bonuses They get location bonuses because we're remote. We get utility bonuses because we have high utility costs. We get land bonuses because the land costs are too high here.
Yes.
So there's these extra percentages that get tacked onto the LIHTC, so it still works here. Mm-hmm. And those handful of guys know that. But it's really hard to break into that LIHTC world. It's super hard.
Yes.
And a lot of it has to do with who's backing that group, right? And can they perform? So historically, Cortec has performed, Carlos has performed, right? So they're always going to kind of be looked on favorably. And anybody entering the market, it's going to be difficult to challenge those two established companies, right?
Right, and that's totally fair. But they found the blue ocean, right? So now getting into that water with them is competitive. It's choppy. But we can go to where they're not, and I think that's the thing about where we are. There's a lot of places where people are not, and if you have the inclination and you want to play in that space, you'll find yourself without a lot of competition.
Right.
And you'll find yourself with a fair amount of opportunity, but you just have to learn how to underwrite that opportunity to the place where you can make money.
I agree.
Let's talk about value creation, right? And let's talk about in a market this size, what moves the needle for you as an appraiser in terms of valuing a property? Is it income, land appreciation, tenant type, future appreciation? What is it for you?
Again, that's kind of like a loaded question because especially when it comes to commercial valuations, every property is unique. There's a unique set of physical characteristics. There's a unique set of income characteristics, locational characteristics. There's so many things that play a part in what the value is going to be that there's no cookie cutter way to look at it. And finding like for like assets are very challenging here.
Yeah.
There's certain things that users want. That's clear, right? So if you have those features that users want, say for instance, generally here in Guam, we're underparked everywhere. It doesn't matter what kind of property you have. Apartment, retail, office, industrial, you're underparked, right? So if you have an apartment building that has 2 spaces per unit, that's going to drive that value because people are going to want it more than if you have an apartment building with 1 space per unit, right? And I don't know who drives 1 car here on island. As a household, we're probably averaging 3+.
Fair. So, a lot of extended families, yeah.
Yeah, and office is the same situation. You'll see a lot of the older office buildings, particularly in downtown Acatña, it's underparked. There's not enough parking, right? You be parking on the streets or whatever. Parking is a pretty good indicator. Retail is going to be the same situation. The highest rental rates are probably going to be properties that have adequate parking to support the use. For industrial, like now, it's funny because industrial is a little bit weird because a lot of these contractors, it's getting expensive. So they'll look for land and throw containers on it for temporary use, right? Because they can't afford, either they can't afford or they can't find. It's one of those two things. But for industrial uses, you want a low lot coverage. You want to have as much open space as possible. Then you can navigate your trucks, your trailers to come in and out. You can also have yard storage and staging areas. So the more open space you have on an industrial property, that's going to be more favorable than if you have a really tight site coverage where you're over like 35%, where the building is taking up a big chunk and you're barely meeting the minimum requirements, even by zoning standards, right? So those are that's how the not only the user perspective, but how legally things are kind of come together. I think a lot of people think of this stuff behind in the back of their mind, but those are real world things, right? Because as an appraiser, I can't outsmart the market. I'm not smarter than the market. If somebody doesn't want to pay for it because the ceiling height's too low for my use, and most of the people are saying, I want 50 cents for that space, I can't say it's $1 just because one person wants it at $1, right? it's the whole widgets thing, right? You're going to price it based on, is there an adequate substitute for it? So there's this also principle of substitution.
Okay.
If I can find a like replacement, and if there's enough like replacements, that's just going to drive down the pricing, right? Because there's going to be more available stuff and it's going to be more competitive. But if it's very few, then the price is going to get driven up, right?
Yeah, so it's really in the eye of the beholder in a lot of different ways, and how the beholder is going to capitalize on the opportunity, and how effectively they capitalize on the opportunity.
Right.
Because it could have been a beautiful location, but they're just not using it properly.
Right.
Or leveraging it in the right way. So, just in that frame of value creation, it's easy. You could build a new building today, open it up. Let's say like Landmark, right? Landmark building, right? They built that building, right?
Yep.
But what does that do to the market? Does that create new demand, or does that steal?
I would say something like Landmark, or even what AutoSpot did across from AK, repurposing that building. I don't necessarily know if it creates demand. I think it just shifts the existing tenant base. So there's no positive absorption of space. So I'll give you one example. Docomo was in Century Plaza. Then they moved to the old Ben Franklin. How long was the old Ben Franklin sitting on the market?
Right.
Right? So there was no users for Ben Franklin until Docomo wanted to be there. So Docomo vacates Century Plaza, moves into their new headquarters, and then now what is Century Plaza doing? They're trying to figure out who's going to take that space. Right? So there's a lot of these bigger players, they just move from location to location, and you're going to see that often with Gov Guam agencies too, right? They're going to be there for a long time. They're going to vacate a space, move somewhere else, but there's nobody to fill that gap once they leave.
Right.
So when Sam's Club was here, right, that place was vacant until Rev and Tax went in there.
Right.
And then if Rev and Tax leaves there, I don't know who's going to come in and use that space. Right? There might be 10 years before you find somebody.
Yeah, no, that's definitely a factor. And Sam's Club is a subsidiary of Walmart. In case anybody wants to know, and they used to be in the Rev and Tax building. It was a Costco operation or something like that, out of the Philippines, right?
Right.
I think, and that was. I don't even remember ever going in there. It didn't last very long.
Yeah, it didn't last very long.
Yeah. Then now owned by, now leased by the Rev and Tax, but maybe not for long, right?
Yeah, from my understanding, that lease is coming up, so they don't know what they're going to do, whether they're going to extend or find another location. Right?
But even at that, that's 50,000 square feet. Like, who needs a 50,000 square foot footprint anymore?
Nobody.
Not even the Department of Rev and Tax. I mean, what does their workforce look like in 10 years? What does anybody's workforce look like in 10 years? What does our footprint look like? So, that's a tough question.
Yeah, and it's like for brick and mortar buildings, but particularly, so if you tie big box retailers like a Sam's Club or Walmart, Costco, even Ross and a lot of these guys in the States. So what's happening is they don't need as much square footage. So there's this big push to build as big as possible and even cannibalize each other, right? So I used to do some appraisals for Walmart, and what they would do is they would build a location, start capturing the entire market, and then if a competitor was going to plan on coming in, they would build a superstore across the street, which is even bigger, and then they'll let the other space go dark.
Right.
And then there's like in the Inland Empire, you see like these bunch of 100,000 square foot buildings that are just empty.
Just to scare the other guy away.
Yeah. So, and that's kind of what's happening in the retail world is because of e-commerce, they don't need as much square footage. They don't need all the display area. They don't need people are more comfortable now ordering without physically touching it, physically seeing it, trying it on. So, yeah, you're right. If 50,000 square foot of space comes up, who's going to take that?
Right.
How do you even carve that up? Can you even carve up 50,000 square feet to smaller uses. Other things like what's the zoning? You might think, okay, let's repurpose for industrial, but if it's a commercial zone, you can't put an industrial in there.
Yes.
User in there, right?
Yeah.
So there's all these little things that kind of drive what's happening.
So how do you differentiate between market absorption, like meaningful market absorption, and like creation of new demand?
That
Or artificial occupancy, I guess. Yeah.
It's like what we were talking about earlier. Stabilized occupancy is easier to gauge for industrial and apartments because it's clear that there is higher demand than supply. And then retail and other commercial properties is probably case-by-case basis, and everything's going to be factored. Is there enough parking? What kind of security does it have? Is it a 3-story building with no elevator? All those things come into play, right? So then that's going to drive the occupancy. And you'll see a common trend even with commercial buildings. Certain buildings are going to have close to 100% occupancy, and then you're going to see other ones that are like at 70, right? If you take the market average as a whole, it might be 90% might be stabilized, but that's an average, right? These individual properties aren't likely operating at those levels,
right?
You know, so that's kind of the hard part. Even with value creations, like say for instance, we were talking about Landmark. Landmark comes into the market, and Autospots come into the market, and they're charging super high rents with full common area collections. They're running triple nets, right? So they're charging the highest rent that Guam has probably seen in 10 years.
I agree. I was like, what?
Right? Yeah, right? It's crazy how much they were charging when they first hit the market, right?
Sure.
It's is that sustainable going forward? Who knows, right? But normally it's like buying a new car. You pay the most when it's new. When you go try to sell it used, the value's going to depreciate, right? So I think a lot of times people love new buildings, so they'll pay premium rents to go in there. But after a few years, it's going to be old, and they might not be able to generate that premium top rent anymore. But what happens is when these items hit the market and then you start averaging things out, it's going to skew it up, right? Yeah. And then everybody's going to think, oh, retail's going up. Retail rents are going up. But reality, our market is so small, those little commercial buildings have a significant impact on that.
Well, you know, we're just like in that where I see the opportunity too is professional management. Like you have an organization where they built this building as a function of I'm just going to use it for my own internal use, but as an aside, I'm going to start renting these buildings, and now they've aged out of the business, and now we have this familial building, and we're just mom and pop. I got a building manager, and maybe I have more than one, maybe I have multiple properties, but if someone was to come in there, renovate it, think about the tenant mix, professionally manage it. Therein is an opportunity where you can squeeze those cash flow margins, right? Maybe you have a better debt coverage ratio. You get better access to financing, so buying it at a better price makes more sense for you. Maybe you have ongoing concerns, like you have a construction apparatus where you can more easily keep up with the property management and the demand that's coming there, and that internalizes that cost. So that's how you see these opportunities kind of come, where you can margin into these buildings and it makes sense for you, and then you can become a professional landlord, and that value is there, but you just have to have that foresight and that plan to execute.
I think it works. It might work for some people, but I don't know if it's going to generally work for everyone, because I don't think everybody can get their rents above $2, right? Because again, it's just a function of the demand. How many retail tenants out there here on Guam can afford to pay that type of rent? And I guarantee you, the lion's share of the businesses, they're capping out at a certain point when it comes to their all-in payment, which is their rent, their utilities, and other expenses that they have to pass through to the landlord, right? There's a point where it just starts to cap out. And no matter how nice the building is, the people that are going to rent it can't afford it. And that's going to be majority of your market, right? So no matter how much you professionally manage, there's a point of diminishing return, right? You can put all this effort into increasing amenities, making everything look nicer, more competitive to like a Landmark or to AutoSpot's building. But then you go market it, those guys already got the handful of tenants who can afford it, right? Now you've invested all this with professional management, which it increases the cost, but you haven't moved that rent needle that much, right? So I think that's why we see a lot of situations where they don't opt for that because their margins are already tight as it is where it's at, right? And if they want to maintain it's all a give and take, right? If they want to maintain that 90% occupancy, then their rents have to be at a certain rate.
Yes.
If they want to try to charge the like $250, $3 rent, their occupancy level is probably going to be like 50%, right? So it's all tied in that way. It's like you can't get one and not factor in something else. It's you have to like start balancing all this stuff out.
I agree. And so with that, it's like that shiny new car kind of like, it pulls you in. But at the same time, once you have that advantage, you can apply your strategy and try and get to the place where it does make sense. But over time, it won't unless you shift and execute in that way. So we talked about value creation, and we talked about kind of the state of industry. Who is playing in our market at the high dollar range? We have hundreds of millions in activity, but not all of that is residential. A lot of it's commercial. A lot of it's commercial financing.
Yep.
Who's here spending and investing hundreds of $millions in the Guam market?
So Guam has a two-tiered investor market. There's the foreign investors, primarily Taiwan, Japan, and Korea. And they're chasing Class A irreplaceable assets. That's kind of like their criteria model. And then below that tier is going to be the high dollar local investors, your legacy families, right? You're talking about the Addis, the Calvos. These guys are that next level because they hold the most assets locally. So they have the capacity and the financial leverage to start purchasing other things. But the big stuff is going to be all foreign investors. There's not going to be local players dealing with that because the reason why local players can't dive into that market unless they partner at joint venture with somebody is the financial metrics that foreign investors use is very different because you're talking about South Korea, Japan, Taiwan. Their markets, their returns are like 1%, 2%. So on a cap rate basis, that's what they're paying on their stuff for these like billion-dollar assets, right? So when Guam's attractive because it's U.S. soil, they still see some safety and some hedge of protection where they can move their funds into the U.S. market, and they're willing to pay a 6.5 cap, which Guam should not be a 6.5 cap market, but they're okay with 6.5 because they're used to 1% and 2%.
Okay.
So they'll take the risk. We'll take the risk at 6.5%. Right.
But that money moves. Why here?
Because it's U.S. soil.
Yeah, but U.S. soil,
and it's close to geographically close.
Right? So being geographically close is significant.
Yeah.
Okay.
Yeah. So those are all kind of components of it, and it shifts too. When COVID hit, they didn't want to invest in Guam until they start seeing the tourism market recover. If they don't see that happening, then they're a little bit leery to invest, and some of the investment criteria change in that situation. Of course, Japan being the most conservative, and I would say Korea is probably the most aggressive, and Taiwan somewhere in between, right? And there's interesting things too, like out of Taiwan, there could be a group of individuals that pull their money together that want to invest in U.S. soil, right? So, and they're willing to pay anything up to $10 million.
Okay.
They don't really care, right? So so the other class of investors, particularly out of places like these foreign investors out of Taiwan, South Korea, and Japan, it might not even be a big real estate investment trust or a big bank coming in to take down a big property, right? It could be a group of 10 individuals, 10 doctors, or whoever has enough cash to pull together So they'll pull together the cash to move their funds out of their country into U.S. soil, and they'll target up to 10 million, right? So these aren't big players. These are smaller guys, but then they are artificially driving up the values because how they're running the numbers to get an adequate return is much different than what a local investor would look at. I would say most local investors, they'll jump on a deal if it's right around 7.5 to 8, right?
Yeah.
But they know if they have to get financing on 6.5, it's not going to work out.
Right. Yeah, if you're paying cash, that's very hard.
Yeah.
I mean, if you're not paying cash, it's very hard to make that work, those numbers work for you. So what I'm hearing from you in what you've said is there's a lot of money regionally that would can get invested here.
Yep.
And it would be a favored investment site. So the only thing that's missing is being able to show them the opportunity.
Yeah.
So what is the issue with showing them the opportunity here?
For the foreign investors, right?
Sure.
It's a lot of that has to do with how well they're connected locally, right? So if they have boots on the ground here, then it's easier for them to do that. And some guys do. Some guys have boots on the ground here, consistently looking for assets that fit that profile. But again, there's not a lot of it because Guam is such a small market, right? That's part of the problem. It's not like, oh, we got, even if they had, 50 groups wanting to come in to this market, you're not going to find that many assets.
So in trying to define the path for significant investor over 10 mil, right? Because that's really what it's going to take to make something happen significant. Like value creation is going to take someone with vision and someone with capital to kind of put something like that together. What assets do we have to help put that path together? What is the state of real estate data here? How do you even start to perform your analysis?
So specifically for foreign investors, they have enough cash to probably take down any of the major large assets here in Guam, like 50 million plus, right? That's kind of like a drop in the bucket for them. It's not a big deal. But the problem is they need to move 50 plus million at one shot. It's not like, oh, let's trickle into the market, 10 here, 10 here, 10 here, 10 here. It's like, no, we got 50 to 75 million, find us an asset where we can place this. And there's not that many 50 plus $1 million assets, single assets here. So when they do identify something, they pretty much run the numbers internally. They know their rates of return. They look at the cash flow, and then they apply their risk, right? How long do we have to wait? What's our exit strategy? How long is the holding period? And they'll run all those numbers internally and get to where they think the value is going to be. And then after that, they'll engage either myself or Cisco to appraise the property, right? To see if their metrics make sense.
Right, but how do you define total market? You have no information. Like, where do you get information from?
We have to, appraisers rely on what information is available. So like what I was telling you, and specifically for bigger assets, those things are like fingerprints. They're never the same. I don't care how many hotels, which hotel it is in Tumon, every single hotel is a fingerprint and has specific characteristics unique to that property. So we have to do a deep dive into the cash flow and into their revenue, into their expenses. So in a case like where we had to go through COVID, there's time. I would take like 2 years of stable operation, like 2018 and 19, see what happened in 2020, then 2021 through 2024 to see if they're actually recovering.
Right.
So I have to look at all that historical data, see what's happening, see what the market trends are, based on like, okay, visitor arrivals we're targeted to be under 800,000 again, right? Those are kind of the things that you need to like take into consideration when you're doing the valuation. So it's a lot of pieces that help you get to a number, It's not generally like, okay, here's the data, here's sales, because there are no sales.
Right.
Right. The last hotel transaction was Westin that provided meaningful cash flow information and like NOI numbers and what the cap rate would be. But that's one of those rare transactions that happen at the top of the market. If you look at all the other historic transactions, these hotels trade in down markets. Investors overplayed their hand, and the market got too soft, so they need to unload. Right? And that's kind of historically what happened with the hotel purchases. Right? It's you rarely see top of the market transactions that happen because these foreign investors, it's not like they're very sophisticated, right? They can see that, okay, let's wait a little bit. Is this going to continue? And the ones that end up buying it at those points where it's near the peak, it's hard for them to hold the asset when there's a slight dip or even a fluctuation that immediately impacts the cash flow, right? So there's a lot of things like you have to look into, even in the past. So you have to time. If you look at most hotels, their occupancies are the strongest whenever there's a military exercise. So whether you have Cope North or these joint venture military exercises that happen biannually, they're probably going to happen. They're probably going to happen more frequently, but every 2 years was the cycle for that. So you'll see the cash flows go up, go down, go up, go down,
right?
Matching those cycles. And you have to factor all that information in when you're looking at it, right? Because if you just start taking the peak numbers, then you probably overvalued it. Low numbers, you undervalued it, right? If you average it, that's probably not the best way to do it either, right? We're told you never average, right? You never do work with averages.
It's the mean.
So that's kind of what we have to look at when we have to do these valuations. It's never easy, and it's never like checking off boxes, right? Because certain assets you're like, well, why? What's impacting it? Like, why did this happen? There's a lot of questions. There's a lot of investigative work. And quite frankly, a lot of times we're not property owners' favorite people because we ask so many questions. We dig in pretty deep, and it's kind of annoying for them to have to explain every single penny that's coming in and going out.
Yeah, no, I understand. It's highly invasive, but but if the result is good, everyone likes you. But if it's not,
if it's not good, then they don't like us.
Sang, one of the things that you brought up is familiarity with investment, and that resonates for me because in these conversations that I've been having, one of the threads that keeps getting pulled is they knew Guam from before. And so you spoke to the Korean construction boom. And so talk to me about that. Talk to me about how a lot of the activity now happening is tied to people with familiarity from when Guam was really booming.
Because like just taking my family experience as an example, like we came in the mid 70s, and that's when a lot of Korean skilled labor was coming in. It wasn't just skilled labor, but architects. My dad came in because he had an architect degree. So he was working for, way back, it was called Greenland.
Okay.
And there was like 4 architects there, and they all split off and started their own general contracting company.
I see.
And these guys, all the money was coming in from Japan. So they were working under companies like Sumitomo, who were building pretty much everything in the 80s in Tumon, right? And a lot of the stuff that was built during that time period. So there was a lot of Korean contractors here, Korean skilled laborers coming in. And to the familiarity, they were making a lot of money, right? So, and they just started slowly investing here and there in things. I don't think it was like an active, like, even for a lot of the stuff that my dad did, it wasn't necessarily he had that investor hat on, but it was, people were offering him like, oh, this could be potentially a good opportunity. So it's like, okay, might as well put some here, put some there, And I think that's where a lot of these local Korean families, they have that knowledge because they've been here. Mm-hmm. And Yeah, I would say Cortec is like on steroids, right? As an example of that, right? Because they came in, same thing. It's like really small operations. They saw the opportunity and they just built this beast, right? And I would say Non-Inc. is in there with them too. They kind of did the same thing,
yes.
right?
Yeah, you're right.
They was small, and then they started getting all these big contracts, and they just scaled up.
Yeah.
So there's a lot of the scaling up things that happen, right? And I think that's generally how it worked back then, right? It's like it was just a slow progression of scaling up to larger things from small things.
And see, if you knew the connectivity, then it would be an easy path for you to find someone who has the insight and the inclination to invest large sums of money in a market.
Yeah, and it's all economies of scale. That's why these guys make it work, right? Because they can leverage their business. And locals, a lot of locals don't have that opportunity. They have really nothing to leverage, right? So they don't have a construction company to leverage their labor costs and material costs by including it all in. Okay, I got a massive $1 million project here. Let me just squeeze in this smaller project and get that savings benefit all the way across the board, right? So the small guy can't do that, right?
You can't do that, but you can have the idea, know how to connect the people who can, and capitalize on the opportunity.
It's interesting because NAFAC was even talking about that, right? When they're bidding out or they're sending out all their RFPs, they were actually coaching smaller contractors to work together, put in bids together.
Yes.
Right? So all you smaller contractors get together, figure it out, and then submit your bid as a group.
Right.
So that you can compete with the bigger guys.
But that's how Guam has always figured out the market, and that's what we're showing here.
Yeah.
Thanks, Sang.
All right.
All right, man. All right, my man. You know, Sang dropped so much knowledge on us over the course of that episode. Where have we been? Where are we going? What are the challenges? And I tried to chime in with the opportunities. But don't get him wrong. Sang believes in the market. He just sees the challenges first, and then he works to the opportunities from those challenges. And I think we all see the challenges. That's all we see. But if we just give up, what are we doing? There are opportunities. We just have to find them. We just have to execute on them. And that's why we talk about them. So a lot of these ideas, for whatever these people say, happen over dinners, over a conversation, over drinks, but just the exchange of ideas. And the idea is we're going to have those conversations, and hopefully you continue them with yourself, with your friends, with your investors, those who actualize us, and with us. So please give us a like, share, subscribe, share your knowledge, share your ideas, share your thoughts. We'd love to hear them.